also true of the watch content itself. We have made some investments there in creating a more dedicated place to watch video. So while a lot of the content is still provided by people in a way that we're not covering costs, we do have a strategy of investing in great content that really starts the flywheel going. And we've been pretty pleased. I mean, it's not the biggest effort anyone has, but we've had some hits from Tom and Time to Red Table Talk to Sorry for Your Loss. And we're seeing some really nice engagement numbers on those shows. And the best of them actually carry over into the Facebook community because the best of the people creating those shows and starring in those shows are also engaging with Facebook. And I think the vision Mark laid out for this all along is that we should do video in a pretty social way. When you think about video ads are pretty exciting because it's obviously a format that marketers have long loved. I think one of the challenges we've had is training the market that you can't just take your TV ads and put them on put them on mobile or put them into Facebook because they don't perform the same way. You know, the best TV ad is 30 seconds. It builds slowly to a story. The product reveal is usually at the very end. The best mobile first ad or ad on Facebook kind of gets to the main point or gets to the product in the first 3 seconds, captures your attention much more quickly. We sometimes talk about it as thumb-stopping creative, where you actually want to stop and watch. I think the good news we have here is that mobile-first video on Facebook right now is now over 50% of video revenue. So that shows real growth, people understanding they need to do it differently, but we've still got a pretty long way to go. We are seeing good results. I'll share an example. McDonald's used mobile opt video ads in Facebook and Instagram newsfeed and stories to launch a limited edition called the Big Mac range in the UK. They had a 16.5% lift in ad recall, and a Nielsen study showed a nearly 20% incremental reach on Facebook versus TV. So I think that shows that when video is done well, it can have a really big impact on companies large and small on our platform.
And then, Eric, I think you asked about margin impact. I just say that the video content budget is already factored into the guidance that we're providing on expenses.
Your next question comes from Ross Sandler from Barclays.
Hey, guys. Can we just go back to the deceleration comment? Totally appreciate the color you just gave, Dave. But at the same time, you said that the impression growth in 2Q was driven by Instagram stories, Instagram feed, and then Facebook feed. And so if those are kind of the current drivers and we're likely to continue to see those ascend in the future, what specifically do you see is slowing down in 4Q in 2020? Is that core Facebook? Any additional color on like the surface that might slow down from some of these changes? Thanks a lot.
Sure, Ross. I mean, if you remember, we're seeing good impression growth across Instagram stories, Instagram feed, and Facebook feed. So we're seeing good impression growth across all of those. We are seeing faster growth in impressions coming from stories, and then also coming from geographies that monetize at lower rates on things like Facebook News Feed. So even though we're seeing good impression growth, that's impression growth that's flowing through at a lower price point than the way that growth was driven, in the prior year. So that's contributing to some of the deceleration. Specifically, as we look out into the remainder of 2019, when we get into Q4, we're going to be similar to how we had good product wins in Q2. We also had several product optimizations in Q4 that contributed to strong performance that quarter. So, we're going to have a tougher compare on that basis. Just broadly, I think, we expect the revenue deceleration trend, that Q2 is not, mark a reversal of that, but we expect to kind of return to constant currency revenue growth deceleration as you get into the remainder of 2019.
Your next question comes from Doug Anmuth from J.P. Morgan.
Thanks for taking the question. One for Mark and one for Dave. First, Mark, how are you thinking about the opposition that you've received so far around Libra? Does it change your view of the time frame at all in terms of rolling out the currency? And then second, Dave, you talked about the higher demands of privacy. can you just talk about how that could impact expense growth as you think about 2020, where in the past you've talked about more moderate expense growth for next year? Thanks.
Sure. So on Libra, and similar to our approach on some of the important social issues that we face around encryption and content regulation and things like that, we get that these are really important and sensitive spaces. So our approach has been to try to have a very open dialogue about this, right? If Facebook from a few years ago would have probably just showed up and tried to release a product on our own, and now the approach on all of these fronts is to outline the ideas and the values that we think an eventual service should have. Leave open a period of however long it takes to address regulators and different experts and constituents' questions about this, and then figure out what the best way to move forward is. And that's certainly what we're planning to do with Libra. So we worked with the 27 other members of the association to publish the white paper to put the idea out there, expecting that this is a very important and heavily regulated area, and there were going to be a lot of questions. We're going to have to work through that. So I think we're currently in the process of doing that. We are trying to provide a safe and stable and well-regulated product, so that's always been the strategy, and we'll continue to engage here.
And then, Doug, you were asking about the impact on expense growth. We're not giving guidance specifically on the 2020 expense outlook, but the privacy efforts do require significant investments, obviously, in compliance processes, people, and then technical infrastructure, and those are factored into the 2019 operating expense outlook. One of the impacts that I'd point to is it's also a reallocation of resources around privacy, so that will have an impact on our overall product development as well. So, that's something that I'd factor in both in terms of, just the overall impact to the business, not purely just the expense side.
Your next question comes from Lloyd Walmsley from Deutsche Bank.
Thanks. Two, if I can. First, can you just talk to us about early learnings from the test of Instagram checkout and what some of the key hurdles are to kind of scaling that more broadly? And then secondly, on OpEx, it looked like you saw a fairly meaningful step up from Q1 to Q2, despite fairly limited headcount growth. So just wondering if there's anything you would point to there that might explain why those are diverging a little bit in the quarter.
I'll talk about checkout. So checkout is in, we talk a lot on this call about early stage things. This is earlier than that. We are in a very small closed beta with 23 brands, which for Facebook is about as small as something could be. It's obviously, as I said, small, but working with the brands, we're pretty excited by their feedback. We're not in a rush to scale this quickly. We're always focused on the consumer experience, and we want to make sure we really get this right. I think the way to think about checkout is kind of in a larger picture of what we're trying to do in terms of commerce and shopping on our services and apps across the board, which is, we obviously have a lot of, consumer engagement in our products, and that's great. We obviously have built some good and robust ad tools that are, helping us grow our business quarter after quarter. If we can help people close the loop a little more so they're looking more directly at products, that makes our ads more valuable. If we can help people check out and pay for the products and even buy the products, it makes the consumer experience better. It also closes the loop on the data and measurement we're going to need going forward. So we're excited about these efforts. We're doing a lot across the board. All of them are, in their early stages, and we think about this primarily from a consumer and closing the loop point of view more than a monetization in and of itself point of view.
And then, Lloyd, you were asking about the step up on the cost side in Q2 versus Q1. A couple things that I'd point to. The cost of revenue was up 49% in Q2, and that's really the flow through of depreciation that you're seeing from the big CapEx build cycle that we've been in, and that's starting to flow through in the in the cost profile of the business. And then if you look at the G&A line, obviously that was impacted by the accrual for the FTC settlement. as well as some other legal expenses, including the SEC settlement. So you have some G&A expenses that were higher in the quarter as a result of that.
Your next